I'm Dan Fitzpatrick at stockmarketmentor.com on Thursday, Valentine's Day. And I want to look at American Tower here. Here's the Reader's Digest thing here. This is a busted stock. But in my notes I have, and I quote, broken stock finding a floor. And this is what I'm talking about. We've been at Stock Market Mentor. This is one of the stocks that we've been following for a long time. It's been up and down, but mostly up. You can see the trend. And by the way, if you're wondering whether you should be buying or selling a stock or whether you should be holding it, when you see the 200-day and the 50-day moving average moving higher, it's a stock that you want to own. Now, here's the trick. A lot of folks see stocks like this. You know, you look back and see that this has been in a nice uptrend for a long time. You didn't see it here, or really here or here, but you saw it on this particular pullback right here. The stock barely bounces, and by the way, I think that, in fact, I mentioned this, I remember in the strategy session that a while back, that you could look at this as a potential shot across the bow, where the stock does something that it typically doesn't do, and that is trade down below the 50-day moving average, and then you could see it recover a bit, and then the question is it going to regain a high? Is it going to make a higher high? A lot of times the stock doesn't do that, and then as the stock trickles down, traders start looking at this area right back here and say, well, I guess that pullback actually meant something. Because what would happen is stock comes down, and then if it starts to move higher, traders that had sold say, oh my gosh, I sold too soon, I got to get back in. And their buying pushes it up. But what it does not do is negate the initial cause of the decline in the first place. In other words, institutional distribution. Well, on this one, we didn't even get that bounce. We got one day where maybe the stock looked like it was going to recapture that 50-day moving average, but it didn't. So let's say you made this, let's say you bought this dip. That's really okay if you did that. You still shouldn't be hurt too much, and here's why. Because with the thesis that I just laid out, your stop should be right here at this low, 75.37. If the stock falls below that, I mean if it twitches at 75.36, then that's your signal that you're wrong. You're just simply wrong. This is not a shot across the bow, which, by the way, is only a trade. It's not for a long-term investment. But your thesis that this was a shot across the bow that's going to give you 3 or 4 or 5 points, that's just wrong, because if you were right, well, the stock wouldn't hit this prior low. So you should have, again, if you bought here, you know, anywhere in here, hopefully more towards here than up here, but even if you bought here, you shouldn't be hurt that bad as long as you held your stop. As long as you held to that, you're okay. So that's a little trading 101 for you. Know why you're buying, and that'll tell you when you're or why you should sell. And by the way, if you can't figure out why, you know, what would have to happen in order for you to sell, then one thing's for sure, you don't exactly know why you're buying. So if you can't figure out, or if you can't determine up front what has to happen in order for you to sell, then don't buy the stock until you can figure that out. So what are we going to do now? Well, I'm looking at this as a potential bounce off the 200-day moving average. So here's my current thesis. If the stock stays above 72.56, which is today's intraday low, then I think we're going to get a bounce. I would look for a test of about 76 bucks, something like that. I don't know if it's going to fail or if the stock's going to continue higher. I actually suspect that it will fail. So what I would be doing is I'd be buying the stock now, keeping my stop, and I know the 200-day moving average is just a little bit below. But I'm saying that this turnaround day is the turnaround day that I think finds the floor. That means that the low of 72.56 is my line in the sand. I take a small position that's less than $1 risk here. If the stock falls below today's intraday low, I'm going to go ahead and take that loss. Small little buck loss, like 96-cent loss. Then if the stock instead continues down to the 200 and then bounces, well, you know what? Maybe I'll be back in. So my point is this. This is my thesis for this stock. I could say, well, I think it's going to bounce off the 200-day moving average. That's definitely a viable thesis too. It's one of two. I've given you my other one, which is the support now is 72.56. It is not the 200-day moving average at 72.11. Now, you can come up with a third one, which is this. 72.11 is the 200-day moving average. If the stock falls down to 72.05, then that's when I'm going to sell. So anyway, you've got my thesis on that. And I hope that helps. Now, members, get over to the strategy session. Also, please check the forum because I was actually, pretty actively participating in there, and I will be participating more in the days, weeks, months, and years to come. I've just had some things, mostly personal, that I've been working through, but you're going to see me in the forum a lot more. So, and thanks for your understanding about that. Okay, have a good evening, and happy Valentine's Day. Don't forget to get those flowers. Avoid the C's candies. They're not really good for you.